Let's get in some technical perspective. Anil Manghnani, Director at Modern Shares and Stockbrokers, is now joining us. Mr. Manghnani, thank you so much for taking out time for us. Could you just tell us what Nifty is doing right now? Is forming a base? Do you think that markets are stuck in a range and it could break out on either side?
Again, I don't think you can make a base at the all-time high or consolidate. I think it's just maybe a pause. Unfortunately, there is no sell signal. So I can't, convincingly go and say short the Nifty as such. Because you get these, even last week it looked like lull and then suddenly you got a move of 100 points 2 days in a row. So it's a tough one. It just seems that the action or the market is just so focused on mid caps and small caps that, again, I'm not saying the large caps don't have any action, otherwise they wouldn't be at a lifetime high as far as the Nifty is concerned. But it seems that the Nifty tends to go sideways, whereas the mid cap and small cap tend to move every day, and then one day the Nifty catches up. But just look at the monthly. For example, you look at last month. The Nifty was hardly up, I think, 130 points or something. So it's negligible. But then you compare that to the Nifty Bank or the mid-cap index or the small cap. They were up much, much larger. So it clearly tells you that while the Nifty is still inching up, yes, making new highs, but the action remains in the mid-cap. So if you look at the mid-cap index last month, it was up about almost 900 points. That's close to 5%. Whereas the Nifty was up maybe 1.5%. So there's a lot of momentum in the mid-cap and small cap, which is keeping the market interested. Again, I don't have a sell signal. Only the if again, I'm not trying to sound negative, but if I had to play devil's advocate, you can only argue that there's so much euphoria, like there's nobody negative right now in the market, and everybody's interested in every IPO that comes out. That's the only warning signal, but it's not a sell signal as such as far as the charts are concerned. And even if you do get a correction, they tend to be shallow and bought into because one is there's enough liquidity, and second is the volumes that we've been clocking over the last 3-4 months are phenomenal compared to previous highs. So that tells you that there's enough money waiting on the sideline that any small dip also is being bought into. So except for the excess euphoria that worries me, I don't have chartical evidence to stick my neck out and say, okay, sell the market. And if the market were to fall, so be it. But I just feel that there is enough money on the sidelines waiting to get in, and people seem to be pumping in on a regular basis. So that's the exciting part of the market right now.
Right. Just in terms of pumping in money or pumping in money via mutual funds, do you think it can continue? It has been continuing for a while. Do you think it can continue, say, if there is a correction, probably more money can come in?
I would think so, because the FII money, a lot of it got deployed only post the UP elections, which is somewhere in March. And domestic money was started in December end and then went on right up to today. So they already had a 2.5 months head start on the foreign fund. And a lot of the upgrades or a lot of the re-ratings of India have come in the last month. So I'm assuming there will still be a lot of money to be deployed. From foreign side, which is the reason I believe that even if there's a fall, which could come for whatever reason, for non-technical, non-fundamental, it could be just, God forbid, something on the political front globally, who knows. But even if it were to come, I think it will be short-lived because there's enough money on the sidelines or already investing and have fresh allocations for further in case the market corrects.
Do you also think that, global markets are also unlikely to see a correction because Dow has also not seen a correction for really a long time now?
True. I think those markets are a little different. We've had subsequent falls and our rally started in 2013. Theirs started in 2009. And we've had sharp corrections due to demonetization, which they didn't have. We've had sharp correction last February, which they had slightly, but not as sharp as us. So again, there are no technical evidence, but if some were to argue, I think historically it's very rare you see an 8-year one-way up move with very small corrections. So are they due for a correction? Yes. Is it evident on the charts? Probably not still.
Also, the currency is telling you that the flow seems to be pretty strong.
Yeah, I think so. I think a sharp move from 69 almost to sub 64 does tell you that the rupee is very strong. Where can it? I mean, see again, because it's rallied. Rallied so fast. Can the dollar bounce? Yes, but I think the longer-term trend is still in favor of the rupee. And that those levels could be closer to 62.90 is what I'm getting as the 50-month moving average on the USD INR. And in a further case, again, I may be a little longer term, 61.85 is the 20-quarter average. So there are some unfinished targets on the downside, upside for the rupee, downside for the dollar. But can it bounce from here? Possible, but I don't think the bounce will last. I think that the bounce will again be a sell into the dollars. Any bounce in the dollar. Upside, there'll be a lot of resistance. I think at 65 and about 65.76, and then the worst case 66.30. So a lot of levels. I think if the dollar were to bounce, would find resistance. But I think eventually maybe back into the 62s is down the road possible.
Right. Say if that happens, have you done any analysis? How does pharma and IT perform? Fundamentally, of course, they are big export sectors, but have you done any analysis historically? How have these sectors done?
Again, there's a general belief, at least tech tends to be inversely related. If the rupee is strong, tech is weak, and vice versa. But having said that, I don't think this is a correction based on currency. Because, the rupee, if you see, was 869 even in up to December beginning. And if you look at Infosys or for that matter, some of the pharma, they topped out a long time back. I mean, Infosys top was in June of 16, whereas the currency topped out in December. That's a 6-month lag. So I think this is a different issue altogether. And there are two issues here. One is rightfully the H-1B visa issue. But I think also these sectors rallied right through from 2009 to 2015. They had a 6-year rally. And that's why I feel they're correcting. I mean, a Sun Pharma topped out in 2015 April. 20 months before the rupee topped out, the dollar topped out at 69. So there is no correlation out there. I just think that these sectors have completely lost interest, and it's a cycle. In 2000 you saw the tech boom. Many of those stocks never came back or came back after 10 years. You take your Suzlons and your GMRs and all the Unitex and all that did very well in 2007 rally. They have not even started their rally 10 years later. So these are cycles in the market. I just think that pharma and IT have had a great run from 2009 to 2015, and that cycle is over. Remember, if you not so much IT, but you take pharma, all these small stocks, these Ajantas and Natcos and all these, they were all 100 rupee stocks which became 2,000 rupees. So they've all had the 10x and 20x's which we saw in tech in 1999, 2000. So they are due to go into a lull period, in fact, maybe a few years. I mean, who's to know? So I'm not relating the IT weakness and the pharma weakness to anything to do with the currency. I think it's purely a cyclical thing that they've had a great run and now they're out of flavor and people are moving, made enough money in that sector and they're moving to something else. That's the way I look at it. I don't think I wouldn't sync it with currency at all.
Right. Then Anil, you said you don't see any sell signals. Anything that's looking good on the charts where you think it can move up? Any buy recommendations?
Very tough at these levels. I think pretty much everything is at live files. But again, something I've already recommended recently. I think after a long time, Fortis, again, it's a pharma stock, but it's, I don't think, completely pharma. But Fortis broke out, I think, above 200. So I think that's one that I've recommended to clients. It's only 10% up. Hasn't done anything for many, many years. I think that's potential to go up to 270, 310. So look at that to start off with. And probably even I'm looking at a Simplex Infra. It's a low volume stock, but again, it's in a mid-cap segment. After a long time, I'm seeing many years, it's giving a trendline breakout at 422, 423. It's 430 now. I'm still watching it because the volumes haven't picked up. But that's something that is came up this morning on the screen that it's looking to break out. So those are a couple of mid-cap ideas if anybody's interested.
Can you give us the targets and stop losses for both these counters?
Again, these are more longer-term calls, so hard to give. I'll give a proper deeper stop in Fortis would be 180 because again, I'm playing it from a 310 kind of target rather than a shorter-term frame. So, I mean, if I don't want to give a shorter term where it triggers off and then, again it rallies. In Simplex, I think it's an interesting one because the life high, if you look at it, is at 790. The stock is still at 430. So there's a lot of potential out there, to go back. If you were just trading it, probably 500 first target, but I think it's got potential to do more. If you're looking for a stop, again, tricky one to give a stop, but I'm trying to keep a little deeper because I want to play for a bigger move. So maybe around 365, 370 kind of stop.
Right. What's your view on some of the infrastructure stocks and the housing finance stocks that have done very well? Would you now be cautious? Would you look at dips to buy some of these stocks?
Again, none of them are sell signals, so I probably just say hold for now. I wouldn't buy right now. I think many of them are now overshot on the upside, and they need to give pullback. I mean, some of these stocks are going up 20, 30% a week, which is kind of unheard of. So I think they are strong, but I wouldn't buy at these points for sure. I'd probably wait for a deeper correction. And same goes with the microfinance. I think some of them have gone, really haywire up. Then they need to pull back some before they look attractive.
All right. Anything at this point of time that is looking, other than the two you pointed out, some of the, we've seen good moves coming, some of the capital good names, but they seem to be now, a little tentative. Do you like L&T or BHEL?
L&T actually after a long time. I mean, L&T was not participating like Reliance Reliance was 8-9 years it broke out, but L&T for the last, 6-8 months was not doing anything, but recently has broken out. So I'd like to hold L&T. Obviously, I'd like to see if it can take out the previous high around 1890, which is still a while to go, but I think that's the first target I look at. I think L&T you could buy here small, and then add on any dip, but that's one that's still not really done much, and I still think there's decent upside. BHEL is a different one because BHEL is nowhere near its all-time high. That is now collapsed, spent a lot of time at the lower levels and trying to bounce. But I think the key for BHEL is going to be this 185 to 210. There are multiple averages at that range. So unless it can take out this range, I'm not saying it's weak, but I'm saying now having rallied from 100 or sub 100 actually from the lows last year of 90 and almost doubled to 180, it has got a major task between 180 and 210 to clear before it's out of the woods. So you actually probably looking at a pullback in BHEL from these levels, but I think from a longer term it still needs to do a lot more work, but it's done quite a bit of hard work at the lower end. But I still want to watch it now. If you've not bought in the last, let's say 50, 60 rupees, you've got to wait now.
Anil, just a word on names like Power Grid and NTPC. Do you think that they will give returns in a sustainable manner, how they have been giving in the last 3-4 years?
Slowly, because again, this is a very patient, both are very patient stocks where they gradually move, then go sideways, then again move up. But otherwise, as a sector, I don't have a problem. I think Power Grid is much stronger. It's at new life highs, so potential to continue to inch up is there. NTPC is odd one. It's still behaving more like an ONGC where it moves, flatters to deceive, and then again, So it's not one I'm very convinced. But I could say hold it for now. It's not weak as such on the chart, but I think Power Grid still looks more steady than NTPC if I had to pick one of the two.
Right. Reliance, you believe, can give a further breakout from here on? So after 1400, it's been in a range. Do you think that range would be broken?
See, I mean, in the short term, it's tough because, again, after going a large cap going up 40% in 2 months is huge. So can it pull back? Yes. My longer term target remains the all-time high of 1650. So I'm not sure whether it can move right from here. But if it does correct, and if the market does correct, I think let's give first 1320. But more ideally, suppose you got a deeper fall to 1240. I'm not saying it'll happen. But if you get, that's an ideal buy because I think there is an unfinished target of 1650.
Right, Anil. Thank you so much for taking out time for us. Always good to get a perspective from you.